All right, ladies and gentlemen, welcome to the painful part of crypto. So, if you're feeling the pain right now, I feel your pain. I'm a little sick right now, so I feel my own pain. So, let's all feel the pain together. I haven't done this for a minute, but I really thought it was important to kind of go through the dynamics that are playing out right now. There's a lot of fear and panic in the markets. There's a lot of uncertainty around why things are happening, what's going on, how long is it going to last, what should I do? Should I run for the hills or should I just calm down and relax? And the answer is always calm down and relax and breathe and meditate. You know, that's our message. But today we're really going to go through what are the things causing the problems in the crypto markets, what are some of the solutions to those things, and what are some of the great things coming up in the future that are the reason why we're so hopeful that the real bull run still hasn't even started. All right, so let's get going on that. So first things first, the reason why crypto's dumping is this: that the mtGox, mtGox was an exchange that got hacked way back in the day, and I remember this was the first bull run that I was here. I think it was like the 2013 bull run, and basically it was a mismanaged exchange. There was a bunch of coins, hundreds of thousands of coins that actually got confiscated at that point, have been in a lawsuit, and now they're being released. Now those coins have gone 10,000% up on average. So now they're being released to the people who they were owed to. Only about 10% of the original coins are being released, but still, when you're up 10,000% and you've had to wait, 10 years to get them back, it's very likely that people are going to dump those coins, and that's what's going on now. So it's probably going to take about 3 months for that process to play out, and that gives us starting in July, 3 months where we can expect coins to be dumped on the markets, which means sold on the markets, and that makes it very likely that the price keeps going down. Now, at the same time, the German government is dumping a ton of Bitcoin. None of this is a coincidence, right? It's not like these things just magically happen. All of this is planned. That you create the Bitcoin ETF hype, everybody runs in, prices go up, now everybody gets excited, and once the excitement hits, that's when all of this stuff starts to happen. So I'm not very, very concerned about that. It's also just part of the game, right? If you have an asset that just went from 15,000 to, let's say, almost 75,000 and did a 5x, a 500% gain, expect that it's going to then have a 50% crash, maybe a 70% crash. All of that is very normal because, a 500% gain and an 80% crash still means you're up 100%, right? So let's keep things in perspective. Now, these coins being released is one piece of it. There's more concerning things that are actually happening that have never happened before. So this has been the model that we've been following, not we, a lot of people have been following. That's called the stock to flow model. This was taken from gold, but it was being used to justify the growth rate of Bitcoin, and Bitcoin had stuck to it pretty well. This black line was the model, and this line is Bitcoin's price. But recently we've seen that Bitcoin's deviated from that in a significant manner, in a way that we haven't seen it deviate before, right? This is one of the big reasons why I think all the old models of trying to project where Bitcoin's going to be at a certain price, at a certain point in time, no longer work. Because this was one of the core models that was being used. It doesn't work anymore. Clearly, you can see Bitcoin has deviated here in a way that it had not deviated before. I do think, it's going to continue to do that, where we'll go down, it'll deviate more, then it'll come back up. Everybody will expect that, okay, now we'll go back to, at this point, this thing is saying that Bitcoin should be at 1,200,000%. Sorry, I'm sick. $1.3 million is what this is saying the price of Bitcoin should be April of 2025. Do you really think that's going to happen? I don't. So the fact that it's breaking from this model tells us that different things are starting to happen from what was happening before. And a lot of the market is still thinking in these terms. That's why they're expecting $1 million Bitcoin tomorrow, right? But even more concerning than that, like I've said before, to me, is that Bitcoin has always followed along with the business cycle, right? So for us, it's really important to make sure that we're able to, of course, all my stats are getting messed up. It's really important to compare Bitcoin to how much money is actually flowing into Bitcoin because of genuine reasons, right? So when we're looking back at the history, This orange line is called the ISN. It's a symbol of the business cycle. And of course, this line at the back is Bitcoin. And normally what happens is Bitcoin bottoms out when the business cycle bottoms out, and Bitcoin tops when the business cycle tops, because that's when money flows into the markets, and when the business cycle bottoms, money flows out of the markets. That makes a lot of sense, right? Even this time around, the business cycle topped in 2017, Bitcoin topped, and then around COVID, the business cycle fully bottomed, and Bitcoin bottomed around COVID, and then they peaked exactly at the same time. This is also why people think the peak was over here. We were out of the market by that time because the true peak was over here, right? But the point is, business cycle tops, Bitcoin tops. But recently, the business cycle is at a bottom, and Bitcoin is going off to the moon like, it's just has a run on its own. So that to me has been a big signal, and we've said this before, that something has been off this time around. I think what's actually happened is the business cycle has bottomed. We are ready for the recession scare to come, which is going to be the reason for the excuse, the excuse for the reason, and the reason for the excuse to print all that good money that's needed to make Bitcoin go on a run. So what's happened is the last little bits of liquidity has flowed into Bitcoin as investors get a higher risk appetite. And this entire run wasn't actually a bull run in my frame of thought. I think this entire run we've had now was like this 2019 run, where we've got bullish, everybody got excited, oh my God, we're all going to the moon, and then we just have this choppy sideways action, right? Same things happened here. We got bullish, oh my God, ETF's going to make us all rich, and then we get this choppy sideways action. Then you have these drops, a significant drop, a little pump up, significant drop, another pump up. It gives you another run, making you think you're going to, now get rich. And then there's a scary big drop. So this was, starting from, let's say, this on the weekly chart. So this is September all the way until March. We had this kind of dropping process. That's, almost 7 months. I think for us to go another 6 months until the end of this year in this kind of scary dropping process, I would not be surprised. So if that happens, that's very on par. But this deviation from the business cycle is something that's very out of the ordinary, and it just doesn't make sense, right? If the economy hasn't turned, the world hasn't turned, the money hasn't come, how is this thing running off? So those are two things that are major differentiations. But another one that I'm really looking at right now is this. This is actually a really simplified way of looking at Bitcoin, right? If you're going to think about when is Bitcoin in a bull run and when is it in a bear market, and it's not in a bull run, you can just put this line, go on the weekly chart, and you can put this line, which is the 21-week moving average, okay? And it's a pretty good indicator of when Bitcoin is above this level, it's in a bull market. When it's below this level, it's in a bear market. Is it perfect? No, but it's a really good indicator of this happening, right? Bitcoin's in a bull market, it's above. Bitcoin goes below that line and stays below that line, it's below. And we're in a bear market, right? But look at what happened this time. This was in 2019. We came above. We made a good run. Everybody got bullish. Everybody got convinced that, this is it. We're about to get rich. Good times are back. And then we had choppy sideways action, and then we dropped below. And then we stayed below for some period of time, had a bit of a fake out on the run, went below again. And then when we came above this line properly and closed above this line right here, that's when the true bull run started, right? Same thing here. Like we went below when we went below this line, it was already obvious that, hey, this was the peak, right? When we went back up here, that's why we got out around here, because we're like, okay, this game is done. Even though it's come back up, it's likely that it's going to go back below. Same thing here, right? Once we came above, we were in the bull run. Now this was a bit of an anomaly, a little bit of an anomaly where we went below, and then the ETF hype pushed it back up. But my point is, now we're below. So now we just wait. We let this process play out. This is on the weekly scale, so each one of these little candles, these ticks, are a 1 week. Let that process play out. The moment we come back above, that's when I start to buy. I think that's a great indicator. It's very simple in its description. Another way to kind of look at this is also, it's called the bull market support band. You can put that on there as well, just says bull market support band. it's a exponential moving average and a simple moving average. Once you come above that, it's representing the same thing, right? But in simple terms, now that we're below, it's not the time to buy Bitcoin. It's not the time to buy Bitcoin right now. I'm going to wait until we come back above this line. But the fact that we're below and we drop below in this significant manner means a lot. So that is one of the big problems that we're looking at right now. Another big one that's been pointed out by our good friend Crypto Crew University is that we have the Bitcoin RSI on the monthly. Okay, and this one, when he pointed it out, this is something really, really major, right? So this is the RSI. If you don't know what the RSI is, please make sure you upgrade your skill sets. But in simple terms, it's the momentum indicator, right? If the blue line is below and is going downwards, then the momentum is going downwards. If the blue line is above the orange line, then the momentum is going upwards, right? But this is on the monthly scale, which almost nobody even looks at because we're so focused on the myopic view. But he pointed out that actually if you put this line right here around this 65 area, that area, once Bitcoin on the monthly drops below that, it has never not had a major crash. Never not had a major crash, which means it's always had a major crash, right? So that process of losing momentum on the monthly, and then at the same time looking at this and going below on the weekly, tells us a lot. It says, look out below, we're going ahead for that big crash. This is the kind of stuff that I've been waiting for. That's why I was over here taking profits around this 63 region. Now it hopefully makes sense to you, right? At that point, people are like, you're crazy. We're all going to 100K. We're all going to get rich. And that's just not how this game works, right? But these things combined together means that it's very, very likely that we are going to have a few months of pain ahead. I would say 3 months. I'm looking 3 months out. I wouldn't be surprised if it's 3 months. I would also not be surprised if it's 6 months, right? If it took until November for us to have some major crash, I would not be surprised. Now, these things don't just happen, overnight. They don't happen right away. They take a long period of time, right? Like over here, it took from, let's say June was the top, and then it took all the way until March the next year of 2020 for, the little cough to happen, which coincidentally happened right on schedule. Weird, isn't it? But the fact that it took, 9 months for that to happen, we've already been in about a 2 to 3 month period of this process playing out, about a 3 month period of this process playing out. So now, for us to have another 6 months, right? So if this started back in February, and this is now July, we've already had, let's say, 5 months of this process playing out. Another 6 months of this playing out would not be very surprising. So I would expect that this goes down, and then when we break above this line, this 21-week moving SMA, when this RSI crosses above and starts to move upwards, those are all great signs. And you'll start to see at that point, probably the amount of panic that'll be in the markets will be insane, right? Now, a few reasons why I think that would happen. Why are all these things loading up again? Of course, when you set up a computer, set up all the technology, everything's looking perfect, and then you go back to use it, and it's all gone to shite. Welcome to life, right? Life is what happens while you make other plans. So one of the big things that's happening that's a dynamic playing out this time is that we are watching the currencies collapse against the US dollar, right? So this is going to be a very big dynamic that plays out this time. We are going to see that so this is Japanese yen. So we're seeing the world's currencies fight against the US dollar, right? Because we know all the currencies in the world are tied to the US dollar. What's happened before is that all the central banks in the world would make money more expensive by raising rates at the same time, and then they would cut rates at the same time, which meant that their value kind of was attached together. This time around, what's happening is that there are different countries getting worried about their currencies becoming devalued very quickly, right? So they're doing their best to protect their own currency. The most dangerous one that we're looking at is the Japanese yen. So the Japan back here in April got very concerned that their currency was losing a lot of value against the dollar, which means it took more and more of their currency to buy dollars. It got to this level, and at that point, Japan started dumping U.S. bonds, U.S. treasuries, because they dump U.S. bonds, they buy U.S. dollars with those bonds, and then they use those U.S. dollars to go back and buy their currency to try to prop up the price of their currency. Because if their currency becomes, worth less and less, then their economy basically suffers more and more, and the people suffer more and more. So they tried to protect their currency back here. They did a decent job. This is on the weekly. But now, slowly, the dollar has been killing the yen a bit by bit. The dollar is doing the same thing with the euro. It's, we know the euro went from like $1.30 down to almost $1. 30% of its value almost got killed. The British pound got hit. The Indonesian rupiah is actually losing value against the dollar. So if you think the dollar is going to die, remember this: the dollar is first going to kill your currency. So this dynamic playing out means we are now in the stage of currency collapses globally. And when currencies collapse, countries collapse. Now, what does that mean for crypto? First of all, what it means for us is I'm holding dollars, right? And I'll say that again. I'm holding dollars. I'm in Indonesia. I don't hold rupiah. I hold dollars, because if I keep holding dollars, I make more rupiah, right? I don't hold euros. I hold dollars, so I make more euros. I don't hold Japanese yen. I hold dollars, so I make more Japanese yen simply by this process playing out, right? What it also means is these currency collapses are going to be a big reason why the central banks print money, right? And even that dynamic's changing now, where it's not that all the banks print money at the same time. It's that different banks are trying to protect their currency, so different banks central banks start to print money at different times, right? Brazil started printing a while back. European Central Bank is now starting to print, and that's going to accelerate. UK is coming up next. So while the Federal Reserve isn't printing, so effectively what they're doing is they're holding the dollar in a strong position and an expensive position, while everybody else is forced to print money, which means they're forced to devalue their currencies to keep their countries from collapsing. This is part of the economic war that's playing out. And if you're noticing, let's say you're in UK and you're noticing life has gotten worse and worse and worse, this is one of the big reasons why that's playing out. But this yen US dollar fight, yen US fight is something to watch out for. It's going to be one of the big reasons when something breaks in this world, in this currency world. It's going to be one of the big reasons why the money printing happens. So in a way it's good, but for countries it's really bad. Now, an interesting perspective to take on what's going on in the markets is, what we're watching is Bitcoin's crashing, but the stock market, the S&P 500, is going up, right? So this is the S&P 500, right? It keeps going up while Bitcoin's crashing. Normally, Bitcoin and the stock market, this stock market are correlated, right? So I think what's happening is now, how we say there's the ocean, and the bond market is the ocean, and then the water flows into the sea, which is the stock market, and then that water flows into our little pond, which is crypto, and that makes crypto go up. But if in that visualization, as the wave flows in, and the sea goes up and the pond goes up, what happens when the water flows back out, when the liquidity flows back out? The pond goes down first, right? Imagine that, like water goes in, the wave gets to the end, then the pond goes down first, then the sea goes down, and then the ocean goes down. And that's what we're seeing play out. The riskiest asset, which is Bitcoin, is dumping. So it's a signal that probably within the next few weeks, we're going to watch the stock market take a dump, right? By August, I wouldn't be surprised. And by November, I wouldn't be surprised if there's a massive dumping out process in the stock market. But another interesting perspective to take on this was that this is the S&P 500 if you look at it on a perspective of weighting according to the size of a company. Okay, so that means the big companies have more weight than the smaller companies. But if you look at the equal weighted index, this is what it looks like, right? It's not just going up. It's taken a turn. And Garrett Soloway, one of our favorite analysts, pointed this out, and he said that actually Bitcoin is leading this index by 2 weeks. So effectively, this thing, which is the stock market, the same stock market, the S&P 500, but equally weighted rather than kind of biased towards the size of a company, it should drop within the next 2 weeks, if that is the thesis that we're following along with, right? The point with that is if it drops, then Bitcoin drops even harder. If anything, if this is going to drop, then Bitcoin's going to drop first. And over the next few weeks, we should start to see this process play out. Does it happen? I don't know, but it's an interesting perspective to take, where this means that most of the stocks aren't making new highs, while the S&P 500 is making it look like the stock market is always making new highs, right? The little games that these financial markets play. Another problem that we're looking at that was pointed out by Crypto Crew University is that this is the fear and greed index. And yes, it has started to go lower, but even more importantly, it has started to make a trend going lower, right? Because going lower is one thing, but starting to make a trend going lower is a significant signal. So this was March. This was basically the peak of Bitcoin. Then we had a low, then a lower high. Then we had a lower low. This is technically a higher high. But you see that the lows themselves are starting to make a trend downwards, which means we are trending towards fear, right? That in and of itself is a signal that momentum is lagging, fear is increasing, currencies are fighting, the stock market is turning. All these signals are now starting to point towards something ahead, right? At the same time, in the real world, we're watching chaos happen. Let me just load all of these up. These should have all just loaded ahead. But, France is rioting because of the election, okay? And that's because the left and the right are fighting, right? The Parisians are all left. The rest of France is rural, so they're all right. This election has basically melted France down. And France is a great signal of the kind of stuff that happens in the West. The French are very keen on fighting pretty early. At the same time, we're watching the business cycle itself. What else was I going to say? The French are fighting. We're waiting for whatever chaos is going to happen in the U.S. because always before the election, there's always this divide that gets put within the U.S. And if you've been watching the American debates, if you're watching Biden and Trump, it's like Dumb and Dumber together, right? At this point, Trump looks like a genius, to be honest. So the left and right is going to fight in the U.S. as well. The whole point of all of this happening is that we are in the time in history where the powers that be, which is the bankers, the elites, the people with the money, have torn the countries in half, and they just want us to fight against us, and that be used as the excuse for the meltdown of society so that the new society can be built, right? We can't blame the bankers for basically bastardizing the financial system and bleeding society dry. That would be too obvious and too honest. We have to end up fighting each other, and now there's all these reasons that are being created. We have idiots being put into power. We have, the left being pinned versus the right, when actually left and right make a whole, right? We all have a left and a right. We're all on both sides. But that election chaos in the U.S. is going to be a big reason why this kind of problem state of the world will increase, which is likely to be the reason why they print money, right? And remember that chaos is good for the markets because that's why money gets printed. At the same time, the World Economic Forum has said that this time around, it's very likely that central banks won't agree with each other in the way they print money, like we've talked about, which means the U.S. dollar will likely, the Federal Reserve and the U.S. dollar will likely stay strong while the other banks start printing, which means things are not going to play out the way that they played out before. Earlier it was so simple to just look at the Fed. When they print money, you get into the markets, hallelujah, easy peasy. Now that trade's become a little too easy. Just like before, it was like, oh, just get into Bitcoin and stay there, and you'll just get rich, and it'll make you, insane amounts of money. All those obvious trades are no longer going to happen. Okay, but out of all this, just remember that make sure you are holding U.S. dollar. Like, not do whatever you want. I'm making sure that I'm holding U.S. dollars over any other currency, because that is going to kill off a lot of the world. So now, those are all the problems we're looking at. Let's look at some solutions. Whew, we made it. We made it through the tough parts. Let me have a little water. So, if those are water out of the biggest glass you've ever seen, right? Look at this, the size of my head. If those are the problems, here's some good things. First of all, when we look forward, there are so many indicators of liquidity, money coming to markets, that are all screaming green. They're all pointing to the fact that there is so much money that's going to be printed and dumped into the markets over the next 18 months. It is going to blow up crypto. Everything is going to go bananas. That stands 100% true. But here's a really easy way of looking at which direction the world's economy and markets and money are going. This is called the ISM, Institute of Supply Management Producers Managers Index. Easy peasy. ISM PMI indicator. But in simple terms, this is the indicator for the direction of the economy. That's the one that we were just looking at before. When it goes above 50 is when we actually start the true bull run in the world, is when the economy is growing in a significant way. When we're below 50, we're still in the non-growth stages. We're starting the growth in this case because the trend has started to go upwards. But just like last time, I wouldn't be surprised if we have another one of these big dips and some scary boogeyman happens before we actually go on the actual run. And could this take months? Absolutely. Could this go all the way out to 2025? It's there's no. Yes, it definitely could. So the good thing is, when this is down, at some point it's going to go above 50, and then it's going to make a peak. So from 50 to its peak is when the real money gets made in these markets, and we haven't even started that process. The economy hasn't even shifted towards the positive side. If you're anywhere in the world, you can feel that the economy is kind of suffering right now. People are suffering. So most of the growth is ahead of us. That's a great sign, right? We are literally at the beginning of the cycle, right? Now, we're going to come to this in a second, but what this also means is that this time around, we're going to see the fastest currency devaluation we've seen in history. Again, does that mean the dollar dies? No, absolutely not. That means the dollar kills all of the other currencies very fast, right? And if you're like, what do you mean currency devaluation? What do you mean kills all the other currencies? It means the things we call money, dollars and other currencies, become worth less very quickly. Not worthless, but worth less and less very quickly, which means, nominally speaking, asset prices go up very quickly, right? The dollar number of what Bitcoin is worth, the dollar number of what crypto is worth goes up very quickly because the value of the dollar and the value of fiat currencies goes down very quickly, right? But one of the big reasons we're going to see that is because the world has fractured. My thesis has always been that the world is going to fracture into different factions, and they're going to fight against each other, and one of the wars is a monetary war. We're now seeing that fracturing happen live, right? The BRICS countries, which now is turning into, I think, 20, eventually 30 countries that are all coming together, are creating their own blockchain-based payment system to create a common currency, the BRICS currency. It looks like it's partially going to be backed by gold. I'm almost certain that it's partially going to be backed by XRP. It is actually built on Ripple rails. It depends on XRP to do global transactions. All of that is now coming true. But the point is that with the launch of this currency, which looks like it's going to be announced around October, Nobody knows for sure, but they're saying October. The launch of this currency, we would have a big competitor against the US dollar, against the pound, against the euro, against that entire fiat dollar-based system that would cause a quick devaluation of the dollar and those currencies, because it's clearly a better currency that would actually increase in value, in dollar-denominated value over time. Therefore, the dollar's value goes down. Okay, so this fast currency devaluation is going to be a big reason why it looks like assets go up. The insane amounts of money printing on the dollar side is going to be one of the reasons why the devaluation happens. And it's very, very likely that the likes of XRP and the rest of crypto benefits from that and could have a fast rise. That's one piece, right? So now this is saying, this is a literal quote. We believe that creating an independent BRICS payment system is an important goal for the future, which would be based on state-of-the-art tools such as digital technologies and blockchain. The main thing is to make sure it is convenient for governments, common people, and businesses, as well as cost-effective and free of politics, right? And these are the same terms that have been used by the Ripple teams and a lot of the people that are involved in this space that I've personally spoken to. That gives me hope and gives me a big hint that this would be based on the likes of XRP. Now, the Federal Reserve System is based on Ripple rails and converts to XRP. The BRICS system is based on Ripple rails, converts to XRP. The UAE, there's so many places in the world that have now built systems that are like that. They need neutral systems that aren't from a specific country. They're free of politics, so they don't care who's using it. They won't just shut you off. They are common goods that nobody can actually shut off, right? Nobody can shut off XRP. Even Ripple has no power to control XRP, right? Regardless, that is a great sign that this devaluation, the growth of the economy, the money printing, all of that stuff, and to be honest, all the chaos happening, all of those things are positives for the markets, sadly. Now, at the same time, we're watching, as we're watching the Japanese yen devalue against the dollar and them dumping insane amounts of US bonds onto the markets, China's dumping bonds onto the markets. Every country that can is dumping US bonds to try to support their own currency, right? So, when we're thinking about liquidity, water coming into these markets, previous times we've just looked at the liquidity or water coming from central banks, and that's the main source. This time around, they're getting creative in how that water gets introduced. So let's imagine Japan sells US bonds, gets dollars, and then pumps those dollars into the markets to try to buy yen. Guess what's happening? We're introducing dollars in the markets. That's liquidity. China dumps billions of dollars of US treasuries, gets dollars, dumps those dollars into the markets. That's liquidity. Banks are teetering on the edge of collapse. When they collapse, guess what? This bank term funding facility, funding, you know what I'm talking about. We all know about the bank term funding program, the good old BTFP. It's basically a program that they created when the two banks collapsed the previous time to give banks money and pump money into the system. They pumped about, at one point, $165 billion into the system. The next time the banks have issues, systems like this are going to be brought on to pump money into the system. Now, central banks are cutting rates, which means pumping money into the system. Globally, Brazil's already pumping money into the system. Switzerland's already done it. Mexico's already done it. European Central Bank has started the process and is going to start doing it on a bigger scale. Bank of England, going ahead, is going to do that, right? Is it going to happen overnight? No. But all of these things are sources of liquidity and water coming into the markets. And them printing money makes crypto go up, right? At the same time, we have a bunch of money sitting in the U.S. Treasury General account, which is basically the U.S. government's wallet, right? And they have a tendency of dumping all of that money into the markets around election time. So right now they have, it looks like, about $765 billion, just a smidgen sitting in their wallet. Could they dump that into the markets? Yes. Before the election, it's very common for them to do that. That is money coming into the markets. There's the overnight reverse repo facility, which is where banks park their money. That has about $400 billion. That could be a source of money being dumped into the markets. Obviously, when the Federal Reserve cuts rates, that's going to be a huge amount of money being pumped. That is basically them pumping the entire world dollar supply into the markets. That's going to be insane. And that's looking like it's going to go out to 2026. I don't have the chart here. But let me actually find it for you. One second. This one. I mean, I've already gone through this so many times, I feel like I'm sure you guys have already seen it, but I'm sure there's one or two new people watching. But this is basically a sign of how much money the Fed has to print just to pay their own debts going forward. And this is showing that, okay, if they have, if their balance sheet, which now is probably even lower than this was at the beginning of 2024, if they're around that 7 trillion mark right now for a balance sheet, and they got to get it all the way up to 16 trillion by 2026, that means they got to basically print the entire world's money supply again. So that is going to be so much money. It's going to make money look funny and the numbers not make sense, honey. I'm telling you this. Like, we're about to go through something bananas over the next, 3 years. And the next 6 years are going to be a faster rate of change in reality than we have seen in the last 30. I guarantee you that. But the point is, this is the biggest source of money that will probably come at a later time. I would expect this to start in closer to 2025. I think there's a period of pain we have to go through while all these other kind of spigots are being opened in the background of printing money. But still, that's a huge amount of money being dumped in the markets. Now, here's some really creative ways to dump money. But wait, there's more. They're now figuring out some crazy stuff. Freddy Mack is figuring out how they've applied to enter the secondary home equity loan markets. That basically means being able to put those on their balance sheet. That has about $5 trillion of money that can be unlocked from that. So that's another spigot to dump money into the markets. Now we're talking about, private companies effectively dumping money into the markets. There's also this thing called Basel IV, which is they're changing the laws to say that as of January in the EU and by June in US and UK, banks are going to be forced to own more bonds and put them onto their balance sheets. When they buy bonds, that's money being dumped into the markets, right? So this is now very creative methods of money being dumped into the markets. Then there's things like commercial real estate. Commercial real estate is still poised for a collapse. Nobody's going back to work. And if 2008 is any signal, it's very likely that when that crash or collapse happens, they will take this commercial real estate and put it into special purpose vehicles. Something like made in lane 1 and made in lane 2. Google those and you'll realize what they do is they take all this bad debt and they put it into special companies that are off the books and kind of shadow monetary banking stuff. But when that happens, that's money being dumped into the markets. That's trillions and trillions of dollars, right? And then, finally, there's the election stimulus, right? That's to say, during the election, they could dump a bunch of money into the markets. Now, that is, the yen, the currencies collapsing, dumping money into the markets, the banking crisis dumping money into the markets, all the central banks printing money to save their currencies, dumping money into the markets. The U.S. government, is dumping money. The banks dumping money. The Federal Reserve dumping money. Freddy Mack dumping money. All the banks dumping money. Commercial real estate dumping money. And these are just the reasons we can see. I'm sure there's going to be a lot more that come into the fold that we're not even aware of. When that amount of money chases rare assets, we are going to see a hyperinflation of asset prices like we've never seen before. Excuse me. If you're somebody who thinks the markets crash down, that's not how it works. In reality, markets crash up, right? And the way they crash up is this happens. Your dollars, your money, your savings become worthless and asset prices spike. And that's that final insane spike that sucks all the value from the average person into the hands of the wealthy, into the hands of the asset owners. And if you're owning the right assets, in that process, you benefit in a massive way. If you're owning crypto, you benefit in a massive way. If you're one of the people who's sitting there clutching onto dollars and trying to save to get rich, that's that kind of final throw. Now, after that, is there a collapse? Very likely, very likely. But that kind of final crash, per se, is the one where the entire system gets reset, right? Could that play out by 2026? Sure. Could that go way further and this process just turns into a stagflation economy where we just kind of hang out in a no man's land for a long time? Sure, that could happen too. But the point is, markets crash upwards. We are about to go on the final market crash upwards. Does it just go straight up? No. We've now seen Bitcoin go on this insane run that nobody expected, way ahead of time, completely took us by surprise. Now we need to correct. We need to crash back down, like we were talking about on the monthly. We need to correct. This needs to, reset, get all the way back down. Everybody will start crying about how, oh my God, the bull market's over. That was it. I didn't make money. Everybody will ride it all the way back down, probably sell the bottom within the next 6 months. And then the real game starts. Okay? So now action steps. What are we doing about it? Number one, I'm moving from all other currencies to the US dollar. Okay? Like if I'm holding any fiat currencies, I hold the US dollar as USDC for now. When the Ripple stablecoin launches, I might hold that. But for now, USDC self-custodied with me, in my mind, not in a place that somebody could actually hack and attack. The second thing is, I imagine like what I did is I, took a bunch of profits up here at 63, which was like right there, right? If there was a bunch of profit, whatever profit was sitting there in the market, I took it, right? Then I sit on the sidelines on that cash. I let all of this chaos play out. If I'm thinking about the sim who's taking the profits, I just let this chaos play out. I get more cash ready. I focus on my businesses. I focus on generating more revenue. And then when all of this stuff that I've just explained plays out and the bell rings and there is this chaos and there's blood in the streets, so to say, I buy it. Simple as that, right? And I buy 100% crypto. No real estate, no nothing else. I'm even hunkering down. I'm like, starting to buy groceries again instead of ordering out, all that stuff. Hunker down, spend less, get cash ready, put it on the sidelines, let the chaos play out, and then buy it. Let me imagine I'm this, because there's a bunch of assets that I'm still in the markets for, right? I didn't just sell everything. I just took profits on the things that were profitable, right? So then for those things, I just wait. Right? Because my thing is, I don't want to sell it lower than where I bought it, right? There's no guarantees of what's going to happen. I'm not going to sell it lower than where I bought it. Then I just wait. Then I still get cash ready. I still convert, my euros to dollars. I still do all the things that I just mentioned. I still let the chaos play out. And then when it's lower, I buy more, right? So I don't sell what I have and I buy more, which means my cost basis comes down. My average price comes down. And then I still benefit from this whole process, right? That's it. Simple. Now, at the same time, if I'm in another country, if I'm in the US, I get the fuck out. If I'm in Germany, I get out. If I'm in France, I get out. Australia, that's a prison, right? I really look at what shift I'm going to make in my life. And if I've been kind of like, itching around the button, I get the fuck out to somewhere that's safe. Okay, all these countries are melting down. You know what's happening in Indonesia? Nothing. We're just going about life like it's great. Great weather, great people, praying, laughing, loving. It's abundant. Debt to GDP is low. The country isn't split down the middle. There's 1,000 things that are perfect here, right? So I get to one of those places. And that's it. And like I always say, other than that, it's all going to be fine. So now, a little message of hope. If you're just sitting there shivering like a scared chicken, remember this: that opportunity and adversity are two sides of the same coin. If this stuff seems scary, remember it is a necessary forest fire for that new beautiful world to be built. That's one thing I've come to terms with. Another thing is that if you're investing into crypto, you're investing into assets, you are one of those asset holders, right? It's easy to be like the elites, the rich, the wealthy. If you're watching this, you are probably part of the top 10% of the world because you have the privilege to sit there and watch this on your $3,000 phone or whatever, you know. So just remember that all of this is part of the necessary pieces that need to play out for us to get to that other side. And then this is not out of the ordinary. If this seems out of the ordinary, it's just because it hasn't happened in our own lifetime. This is a cyclical part of history breathing, of humanity playing out the way that it does, of life playing out the way that it does. Yes, we are in the stormy part of history, but also stormy parts make the best forest, right? Forest fires make healthy forest. Storms make healthy forests. So let's just hunker down, enjoy this process. Just to reiterate, the simplest thing to do is just watch one line, right? When Bitcoin's below that line, let it stay below that line. When it goes above that line, and these couple lines cross, we're going to follow this long live. And just, you know, put everything on the line. With that, we'll see you next time. Love.